In this video, we are going to be analysing BBIO. Now, this one is key because they have had some news today, and that's why we're up 65% on the day. Now, their phase 3 trial, and we can put it up here, is to do with their phase 3 trial showing highly statistical significant improvement. So obviously, whenever these drugs are getting closer and more likelihood of them getting accepted and FDA approved, obviously you're going to skyrocket off this sort of news. So that's firstly the catalyst, and that's why I'm being a bit more patient on the play. Because what you'll see, and again, if you're in the Discord free to join, you can see we did talk about what our game plan is for this. And again, I am looking to trade this, but I will probably be delaying it until later in the day or until we get that next spike. And the reason for that is firstly where we are. So if we go back to yesterday, or if we go back to Friday before this news was released, we were trading around $17. Now this $17.75, this was considered fair value on the stock. So you have BBIO trading exactly at fair value. Then this news comes out, then you become a bit overbought, you become quite overbought, and now you become extremely overbought. And what these levels are, again, these yellow ones are the first deviations, blue ones are second deviations, and these green ones are third deviations. Now, third deviations are usually the most important ones. Very rare that you see stocks trade above these levels, and if you do, tends to be short-lived. So that's exactly what we're seeing on BBIO. Is we gapped up, we tested this level, you get that quick pullback to VWAP, and now we've broken through and you got that retest, it's held well, and now continuing up. So it's showing that this level has been respected, but overall the stock is strong, which again you expect of this sort of catalyst. So that's why I'm being more patient on this play, because the level is holding. So until you kind of get another significant move, so I would be looking at probably $35, or we start to kind of at the end of the day when this volume starts to definitely decline, that's how I'll be looking at playing this. Because as soon as we do that, again, the likelihood of it starting to pull back will just kind of be greater, and as well the options will get cheaper, because that's how I'm looking to play this. Again, the key levels though, what we'll go over first is $27.90. If you break below that, you have $25, $24.50. So again, these are the key levels to be paying attention to. When you're above these, you are extremely overbought. You expect stocks to start to reverse and pull back below this level. But if we do continue low, you have $22, $21.10, and $19. So really above any of these levels, you expect the price to start to gradually reverse. But especially when you're at these third deviations, you really expect that pullback to be quite quick. So again, we would expect to see a pullback relatively quickly as of now. Now, these would be our targets to the downside. That's why these levels are still here. They're used as resistances on the upside. Obviously, we just gapped above basically all of them. But on the downside, these will now be used as targets. So if we retest this $27.90 target, $25, $24.50, $22, $21.10, $19, these can all be used as targets on the downside. So how am I looking to play this? Again, I'll probably be looking to trade it through covered stock. Right now, it's going to cost you about $300 max risk to short 100 shares, buy a call. And when you do this, again, your max risk on the trade is $300. No matter what happens, if it goes against you, that's the max you can lose. Even if it went up to $100 a share, that's the max you can lose. However, as it starts to pull back in the money, the call will lose value. But again, you're shorting those 100 shares. So you can make money on the downside as it continues to pull back. And that's why I like this strategy. If a stock's easy to borrow when it's super extended and you're expecting a big move, then obviously you can you hopefully lose the whole value of the call, and then you lock in profits on the shares as you start to pull back a bit further. So that's what I'm looking at trading it. Again, you can trade it other ways. You could be outright puts, just shorting the shares, but again, that would be risky overnight. Or you could probably be looking to do some sort of vertical spreads. But again, the way I'm going to look to trade it is covered stock. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.